When you have 17 Fed speakers in a week, it's getting a little ridiculous.
Well, I agree, Brian. That's a lot of Fed speak going on, and of course,
Powell says this, Bullard says that. It's like Evans says this. Like,
right?
My gosh, let me just focus on the fundamentals, right?
Absolutely, but it certainly adds some possibility of uncertainty with the markets when so many Fed presidents speak. So we'll see what they have to say today.
So what do you focus on? All the, listen, obviously the political drama, COVID, the president, the Fed. What's key to you? What do you look at every day, Rob?
Well, I think Brian, if we start with the economy, we're probably going to get a really good number for GDP growth in the third quarter. That's going to come out later in the month. So that's good, but it's also a backward-looking indicator. And unfortunately, in the second quarter, only 53 of the 500 companies in the S&P 500 gave any guidance. So that's continuing to provide some uncertainty going forward. The economy does seem to be improving, though. If you look at a number of indicators, certainly housing and non-farm payrolls, unemployment, consumer confidence, and probably the most important thing right now that is the Fed is going to continue to print money until they reach their dual mandate, and that's not going to happen anytime soon. So that really is underpinning a lot of things right now, in my opinion.
When we look at sort of equities to buy and all this, some people say you buy the safe sort of big consumer discretionaries companies. Walgreens, it's been an underperformer. I think a name you like. Coca-Cola, perhaps another name you like. I mean, the companies aren't going away, and the dividends, they look okay.
Yeah, just to hit on the point you made there, in this low yield environment, I continue to think that dividend payers and companies that grow their dividends are going to continue to look attractive. Walgreens, as you said, has been hit a bit by the pandemic, but their yield's over 5%, and they grow that yield. And you mentioned Coca-Cola, J.P. Morgan Chase, their yields are near 4%. They also happen to be in my three favorite sectors: consumer staples, discretionary, and financial. So those are certainly some names that look attractive to me right now.
You like the financials, Rob? I mean, because they have just been left in the dust. I mean, as the yield curve moves, net interest margins have compressed. 0.71 on the 10-year yield. Unless you're taking huge trading risks, I don't see how these companies make a lot of money quickly.
Yeah, well, I mean, but they're so cheap, though, Brian. That's the thing. I mean, there's not. I don't really think there's necessarily a lot more downside risk here, and so yeah, do like financials.
Shepard Smith here. Thanks for watching CNBC on YouTube.